Let's talk about Warren Buffett, the Oracle of Omaha, a man whose name is practically synonymous with investing genius. For decades, he's been the face of calm, rational decision-making in a world that often feels chaotic and unpredictable. And when it comes to cash, Buffett doesn't just have a little, he's built what many call a fortress of cash, a massive reserve that's the envy of the financial world. As the legendary leader of Berkshire Hathaway, Buffett oversees a sprawling empire. His company owns everything from insurance giants to railroads, energy companies, and even beloved brands like Dairy Queen. It's a business mosaic that reflects his unique approach to investing. Buffett's investment philosophy is famously simple, yet incredibly effective. Buy wonderful businesses at reasonable prices, and then hold on to them for years, sometimes decades. He's not chasing quick wins, he's building lasting value. Unlike the typical Wall Street crowd, who often get swept up in the latest trends or panic at the first sign of trouble, Buffett stands apart. He's known for his patience, his discipline, and his ability to tune out the noise. Lately, as of May 2025, the financial world can't stop talking about Buffett's latest moves. Every headline, every analyst, everyone wants to know, what is he buying? And more importantly, what is he waiting for? The curiosity is at an all-time high. Right now, Berkshire Hathaway is sitting on a truly staggering amount of cash, over $300 billion. That's more than the GDP of some countries, just waiting to be put to work. So, why would the world's most successful investor choose to hold on to so much cash, instead of diving into new investments? Is he seeing warning signs that others are missing, or is there a bigger strategy at play? Some wonder if Buffett is quietly preparing for a market downturn, while others believe he's simply waiting for the perfect opportunity. Is he predicting trouble, or is there a deeper lesson here for all of us? Today, we're going to break down exactly why Buffett is holding on to this mountain of cash, and what his strategy could mean for your own financial journey. Because this story isn't just about a billionaire's bank account, it's about the power of patience, the importance of discipline, and the wisdom of waiting for the right moment to act. So listen closely. Buffett's approach could completely transform the way you think about your own money, your investments, and your future. Berkshire Hathaway's cash pile has soared to over $300 billion, an astonishing figure, and one that was confirmed by Warren Buffett himself at the 2025 annual meeting. This isn't just a headline number, it's a reflection of years of disciplined decision-making and a cautious approach to investing, even as markets have surged and others have rushed in. That $300 billion represents about 27% of the company's total assets, more than double its historical average. For a company of Berkshire's size, that's a staggering amount of cash sitting on the sidelines, waiting for the right moment. This isn't just a rainy day fund. It's a strategic fortress, built to weather any storm and seize opportunities when others are forced to retreat. Berkshire now holds nearly 5% of the entire U.S. Treasury market, making it a true financial superpower, with the ability to move markets and influence the flow of capital. While other investors scramble to put every dollar to work, chasing returns in a competitive market, Buffett is deliberately holding back, resisting the urge to follow the crowd. This is a clear signal. Buffett isn't finding enough attractive investments right now. He's not willing to compromise on quality or price, even if it means sitting on a mountain of cash. Instead, he'd rather earn a safe, modest return on government bills than risk overpaying for assets that don't meet his strict criteria. It's a move that prioritizes long-term safety over short-term gains. This discipline is the heart of Buffett's approach. He's built his reputation and Berkshire's fortune on patience, restraint, and the willingness to wait for the perfect pitch. The $300 billion isn't just a number, it's a statement of intent, a declaration that Berkshire will not be rushed or pressured by market trends. It shows Buffett's willingness to wait for the right opportunity, no matter how long it takes. He knows that true value is rare, and he's prepared to be patient. When you see that cash, see it as a symbol of strategic patience, a war chest ready to be deployed when the time is right, not a sign of indecision or fear. It's not about fear, it's about being ready. That's the Buffett difference, the courage to wait, the discipline to act only when the odds are in your favor, and the confidence to let opportunity come to you. Why is Buffett holding so much cash? It's not about timing the market or predicting a crash. He's not retiring or making a bet against stocks. The real reason? Patience. Buffett sees cash as power, the ability to act when others can't. He's waiting for a rare, great opportunity. In crises, when others are desperate, he can buy wonderful businesses at bargain prices. That's how he scored big during the 2008 financial crisis. This cash isn't fear, it's preparation. Buffett refuses to overpay or settle for mediocre investments. He's not chasing small gains. He's waiting for the next massive opportunity. This discipline sets him apart from almost every other investor. The lesson. Sometimes, the smartest move is to wait. Patience is Buffett's secret weapon. One of Buffett's greatest lessons is the art of doing nothing. Wall Street feels pressure to always be investing, but Buffett rejects this. He says forcing yourself to invest on a schedule is the dumbest thing in the world. Great opportunities don't arrive on a timetable. Sometimes the best move is to let cash pile up and wait. Buffett isn't worried about appearances. He's focused on protecting and growing capital. Making a bad investment is worse than missing a small gain. Holding cash is a defensive move that lets you play offense later. For you, this means you don't have to invest all the time. It's okay to wait for the right opportunity. The power to say no is crucial. Build your own cash reserve and be ready for your moment. Sometimes, doing nothing is the most profitable action. Buffett loves a baseball analogy. In investing, there are no called strikes. In baseball, you have to swing or risk striking out. In investing, you can watch pitch after pitch, investment after investment, go by. You wait for the fat pitch, the perfect opportunity. That's what Buffett is doing with his $300 billion. He's not interested in singles. He's waiting for a home run. These fat pitches are rare, but when they come, he's ready to swing big. He's willing to spend $100 billion if the right deal appears. This is the opposite of spreading your money everywhere. Buffett believes in waiting and then concentrating on the best idea. Most people get impatient and swing at bad pitches. That's how they lose. The lesson: wait for your fat pitch. Patience beats constant action. Buffett's longtime partner, Charlie Munger, championed extreme concentration. Munger believed most people would do better making just a few great investments in their lifetime. Imagine having a punch card with only 20 holes. Each investment is precious. You'd save your punches for the truly exceptional ideas. Buffett credits Munger for pushing him to focus only on the best. For Berkshire, small investments don't move the needle. They need huge, rare opportunities. That's why they're content to wait, honoring Munger's legacy. The goal isn't to own a little of everything, but a lot of a few outstanding businesses. The $300 billion cash pile is a direct result of this philosophy. Extreme patience and concentration, Munger's wisdom in action. Does Buffett's strategy of waiting actually work? The numbers say yes. Since 1985, Berkshire Hathaway has averaged 17.1% annual returns. The S&P 500, including dividends, averaged 10.5% in the same period. That's decades of market-beating performance. If you'd invested $10,000 in the S&P 500 in 1985, you'd have about $227,000 today. But $10,000 in Berkshire? Around $2.4 million. That's the power of patience and selectivity. Holding cash and waiting wasn't a mistake. It set up massive gains. Buffett's track record proves you don't have to be invested all the time. Being selective and patient is more powerful than chasing every return. The numbers don't lie. Patience pays, and it pays very, very well. What is Buffett waiting for? Is it a specific event or a particular market condition? He's not predicting the future, but he knows opportunity comes during fear and panic. When the market is in turmoil, that's when he sees the potential for great investments. Think back to 2008 or early 2020. When markets crashed, Buffett was ready to buy. He saw these crises not as disasters, but as rare opportunities to acquire valuable assets at a discount. Because he had cash, he could make deals on his terms while others scrambled. His liquidity allowed him to negotiate from a position of strength. He's waiting for the next storm, a moment when great assets are sold at foolish prices. This is when his patience and preparedness pay off. He doesn't expect it tomorrow, but he's prepared for whenever it comes. His strategy is built on patience and readiness. When it does, he can deploy billions in a single weekend. This ability to act swiftly and decisively is what sets him apart. That's the ultimate power move: act fast and big when the time is right. It's like a chess game where timing and strategy are everything. While others panic, Berkshire will be ready to strike. Their calm and calculated approach allows them to navigate through chaos. The $300 billion isn't a burden, it's a strategic asset. It's a war chest that gives them the firepower to seize opportunities. It's the key to unlocking the next legendary investment. This cash reserve is what enables them to make bold moves. Buffett is simply waiting for the right lock to appear. He knows that the right opportunity will come, and he'll be ready. And he's confident it will. His experience and track record give him the assurance that the next big opportunity is just around the corner. What does this mean for you? Buffett's lessons are universal. First, patience. Real wealth takes time. Don't rush into bad decisions. Second, keep a cash reserve. It's not just for emergencies, but for opportunities. Cash gives you power, the freedom to say no or yes at the right time. Third, wait for your fat pitch. Don't chase every trend. Make a few great decisions, not dozens of mediocre ones. Be selective and disciplined. Pretend you only have a few punches on your investment card. Make each one count. Trust the process. Buffett's track record proves this works. It's not as exciting as day trading, but it's far more effective. Holding cash isn't timid, it's strategic. Sometimes the smartest move is to do nothing and wait for the perfect moment. That's a lesson worth remembering.